What's up everybody, Yasin Nizami here, back with another update on my channel with regards to the market analysis. So we saw Federal Reserve raised their federal funds rate by 50 basis point, which was expected by the market already, but this is considered a lesser rate hike compared to the previous 75 basis point rate hikes we saw throughout this year. So this is kind of a sign that they're kind of slowing down their rate hike progress, but it is certainly not a sign that they're going to stop here, because they haven't said anything like this, that this is going to be the last one. So the next FOMC meeting is going to be in February next year, and this will be a data-driven decision, because they have clearly said that the inflation is still too high, even though it's 7.1%, came down from 8, but it is still too high, from the target level, which is 2%. The market rallied yesterday as soon as the news came out, but as Federal Reserve Chairman Jerome Powell was talking to the press conference, we can see the market was kind of changing its direction. And this morning, the market was completely down from its previous highs, and we can see Dow is down 700 points already. Well, the reason is the market is kind of digesting the news from yesterday. So people are thinking, okay, even if Federal Reserve is going to pivot sometime in 2023, even though they haven't said that, they said the rate will still going to be at that level throughout 2023 and until 2024 before they can even think about reducing them. But the market is kind of not believing on Jerome Powell's words, because we can see that the yield curve still very inverted, right? We can see the 2-year treasury has gone down to somewhere around, let me just quickly see that the US 10-year is right now 3.4, US 2-year treasury is 4.2. so you can see the inversion. It's pretty much 70 basis point spread between the two US 2 years and 10 years, and it's inversion. So the market is not believing on J. Powell's words, because market thinks that we are already in the recession, if not depression. We are seeing a huge layoffs in the tech sector. If you know anybody in tech sector, ask them how their company is performing. I work for Cisco. We are going through big layoffs right now. So there's a lot of job losses happening in the tech sector that is not being reflected in the unemployment data that Federal Reserve is looking at it. My fear is, once this holiday season is gone, then we will see the unemployment will is going to shoot up, because most of those seasonal jobs are posted in this time, and once that period is gone, then all of those seasonal jobs will be taken away, and then we will see the real unemployment number sometime in January-February time frame. So that will surprise the policymakers, and this will be a beginning of their process of determining, should we take a pause here or should we reduce the rate hikes. So that's going to happen. So I think what people are thinking, that even if we believe Federal Reserve will pivot sometime in 2023, then that means we will be in the recession, at least, if not depression, because all of these economic data that we are seeing right now in terms of yield curve inversion, job losses in the tech sector, which will definitely reduce the consumer spending, because those people who are working in big tech, they have purchasing power. If they are out of work, which will immediately reflect the reduction in consumer purchasing power in the economy. So when we will see that the Federal Reserve is going to think about pivoting, that means we will already be in recession, because what Federal Reserve is doing is they're trying to trigger recession by slowly tightening the screw in the economy by raising rates and reducing the balance sheet capacity, because they have been purchasing bonds previously. Now they're kind of selling those bonds in the market and trying to suck the stimulus out of the economy. So they are actually trying to trigger recession, which means unemployment has to go up before they can pivot. So the traders and crypto traders and day traders who are wishing for pivot, well, be careful, because before the pivot there will be a recession, and the recession will be a longer one, not a shorter one, and then Federal Reserve will be forced to pivot to stimulate the economy again. But then the economic situation will be even worse. People will not have money to spend. There will be no speculation in the stock market or crypto market. and then this will be a long debt quiet period of not much spending, more saving, and no more speculation games in the market. So that's what I think market is realizing after yesterday's press conference, which is why we are seeing the market is kind of down, and they're digesting all the information and news about what is being predicted about the next quarter in 2023, which will definitely put a lot of pressure on the markets. And of course, if we are going to be in the recession, that's not good for the markets, not good for the stock market, not for crypto. People will not have money to spend and speculate, and inflation is still too high. But I think inflation will come down in the next quarter significantly because of all those obvious reasons that I just talked about. And we'll see. This will have a direct impact, on Canada as well. So Canadian economy will also have similar challenges what we are going to see in the US as well. So that's what I wanted to share with you in this video. So let me know what you think, and I'll see you in the next video. Take care.